Okay, it looks like we're live now. We'll go ahead and open the meeting. It's 3:10 on June 24th. So I'm calling this specially called meeting to order. The next item on our agenda is approval of the agenda. Has everybody had a chance to look at today's agenda?
Yes.
Okay. Do we have a motion from someone to approve them?
I'll make a motion. This is Stephanie.
Okay, got a motion. Do I have a second? I can't second it as chair.
I'll second it.
Second. Sorry.
Wait. Got to give your name. Try to remember a second or make a motion. Put your name there first.
Dodd, second.
Okay, second from Dodd. Are there any other discussion of the approval of the agenda?
One observation, Mr. Chairman, you can actually make a motion yourself if you like. There's no bar to that.
Really? I thought Robert Rules doesn't frowns on the chair making motions.
But the Development Authority is always cool with it.
Oh, okay. All right, that's fine. All right, all those in favor of approving the agenda, say aye.
Aye.
Any opposed? All right, motion carries. The next is the approval of the minutes of our last meeting. Has everyone had a chance to take a look at the minutes?
Yes.
All right, let me entertain a motion to approve the minutes.
Stephanie will motion to approve the minutes.
Okay, who wants to second that?
Erica. Go ahead, God. Go ahead.
Whomever.
Seconded and thirded.
Okay, we'll give it to Erica because Dodd's got one already. Is there any discussion of the minutes or anything changes that people see the need? I'd look them over. I saw they look fine to me. Anybody else have any other concerns? All right, hearing none. We're going to call for the motion. All those in favor of approving the minutes of the last meeting as written, say aye.
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 All opposed? Oh, motion passes unanimously or whatever it is. Damn.
Unanimously.
All right, now the next agenda item, number D, is old business, which is continued discussion of the revolving loan fund. Stephanie, did you get it? Have you posted the updated one with your financial notes?
I did not, but I can share it on my screen. I didn't want to put it in the folder without people seeing it, talking about it first. So let me just share the content if you don't mind.
Okay, if you're going to share it, that means that you're going to be the one driving changes to it.
Yeah, that's fine.
Okay.
You okay with that?
Yeah, I'm fine with it. I don't have any problems with you making the changes.
Okay. Well, maybe what we're going to do is just look at it in general, because my copy is already accepting all the other changes so that you could see the changes I'm suggesting, but maybe we go back to our original document and not my copy of it and make the changes there. So for now, maybe we just look at this as a discussion point.
So are you going to highlight what
Yes.
changes that have been made?
Yeah. Can you see my screen now?
Yeah, if you can make it about 2 or 3 things bigger.
Let's see.
The font's pretty small for my eyes.
Let me zoom it out. Is that better?
Oh, yeah.
Waiting. There we go. Yeah, that's much better.
Okay.
I can read that.
So you won't see any of that markup that we've been working on because I just accepted all those changes. I'm only going to show you the parts that I put in, which are these highlighted areas. Last time we were talking about eligibility criteria, and we kind of all agreed that maybe we want to look at an operating cash perspective in addition to the 25%. So I've kind of fleshed that out a little bit more. And it also wasn't clear about the revenue loss, how we were going to, what does that mean? So I kind of cleared that up. And maybe these aren't the right dates. Maybe we look at June, maybe we look at April, but we can decide that. But at least a 25% revenue loss in a 30-day period demonstrated by providing evidence of revenue for 2019 and 2020. Some month. May seems like a good month because April, maybe if people were still recognizing revenue prior to the shutdown, where May, it was full on the worst situation that a business was in. The way that I see revenue flow, what do y'all think about May?
Sounds fine to me.
Erica, does that line up with?
So, yeah, I'm thinking that we should look at the period from the shutdown orders to the first phase of reopening. So we can like extend it to the week before, week after, but that would give us the best idea, because some businesses have reopened and rebounded.
Mm-hmm.
And so if they've got cash flow now, we might want to, and I can't remember exactly what those dates were.
I think it was March 15th was around the time.
Yeah,
and
but
so
the reopening.
It depended on the industry.
Yeah, so that's why I think that that's a good period to take a look at. So what were you doing last year during that same period compared to what you're doing then? And honestly, then some industries aren't going to rebound, like retail. I mean, the restaurant's not back where it should be. We're opened at diminished capacity. So we may want to extend it a few weeks past.
A 90-day period type thing where you looked at, I mean, we could say a 25% revenue loss from second quarter to second quarter, which is March through June or April through June. That'll be a nice cutoff in the way people do quarterly reporting. What do you think about that?
I think that that's a good thing to look at. Well, let's see, we're almost through June now. So that even would take into account that, we're reopened, but we're not necessarily back in business.
Yeah. Now, and this would not be affected by any of the loans because those wouldn't show up in their revenue.
Well, that would be in the bank statement though, because we're going to ask them for evidence of cash on hand.
So what do you think about the fact that, okay, this is something that I had struggled with. Are we going to look at gross revenue, like after cost of goods sold, but before operating expense? Or are we looking at their net income? Because some people might have more, they might have more or less revenue now, but they might also have less expenses because they laid people off who got unemployment, where their net income may have increased, but their gross revenue may have dropped.
What's the harm in asking for both those numbers? Everybody has them.
Yeah, there's nothing wrong with it, but if we're using a 25% revenue loss, I think we have to specify what numbers we're looking at so we aren't tweaking it based on the business, because then it shows that you're not being consistent.
A gross revenue versus net.
Yeah, so a gross, for a restaurant, all of your cost of your, your inventory that you're selling, that would come off of your total revenue and produce your gross revenue.
Right. It's a function of gross.
Yes.
Yeah. So that would be payroll and purchasing.
So you put your payroll and your cost of goods sold and not as your operating?
Well, they are operating, but those are the ones that are direct functions of the amount of business that you're doing.
Yeah.
Hopefully. I mean, sometimes you have to have people on hand even if you don't have customers. And so your percentage of payroll goes up. And that's probably true across retail.
Maybe we say a 25% revenue loss and we don't specify whether it's gross or net until we start getting applications and seeing. I mean, and it's likely that if you have a loss on gross, you're also going to have a loss on net. But with the layoffs is what I'm thinking, that people may have had some revenue, but not near as many expenses.
So if we're looking at what their cash burn is,
Mhm.
and we're looking at cash on hand as one of our metrics, that
Mhm.
kind of takes care of this problem. So yeah, maybe,
Yeah, it
maybe you're
does.
not spending it, but what will you need to survive the next 90 days?
So let's do gross revenue then, because that takes into account, that pretty much gives you a better look at operating. Like, if you're not going to bring in revenue, which means you're not going to have cost of goods sold, your operating expenses will be what sinks you, not your cost of goods sold. Because you wouldn't.
Exactly.
Yeah. So we'll use the gross after you've removed your cost of goods sold, that gross revenue line, and we'll use that to do the comparison to see if there's a 25% revenue loss. And the cash part will take care of the other stuff.
Yeah.
Okay.
Okay, so put the word gross before the word revenue.
Yeah. And then business must have at least 30 days, but not more than 90 days of cash. And we can provide a calculation. In fact, I kind of started setting up a website that we may not use, but just so I could firm out all the different requirements and how it will be divided up. But if we do something like that, we can easily have a calculation so someone can see, do they qualify? But I would hope that people would send their information in anyways, even if they're not sure, and let us, do the work for them. But some people like to be, self-help and just see it themselves. So I think we should provide that.
I think it behooves us to capture the documentation from
Mhm.
people so that it's very clear as opposed to some numbers stuck in on a website. I'd rather have we'll call the raw data from the applicant so
Oh,
that
sure, yeah. But
so we can have an audit trail.
some people may in their minds want to see, well, I don't know. I've never thought about how much operating cash I have. How would I calculate that? Because maybe they don't know how many days they have. So just so that they can get an idea of their own burn rate, because that's not a
Sure.
number that people think about often, or they're
We could
don't have
we could
to.
have an estimated operating cash calculator, something
Yeah.
like that.
I mean, this wouldn't
We're
even be the
gonna
number
want
they're
to think
entering.
about. We're gonna want to think about this too with the third party that is going to be part of this process, and just thinking
Sure.
about how we would operationalize it.
They don't know. I don't know that they're going to say this is a valid way to look at it, because you don't generally see these things. But I think you miss a whole big picture if you're not looking at cash in this case, because it's an emergency situation. So, this is what I'm proposing, and we can still tweak it, and I can send it to Ilka so she can drop it into our other document that we're working on, and then we can tweak it more. But there's one more area I wanted to show, and this was what kind of documentation they're going to have to provide to us. So we're definitely going to need a profit and loss statement for, now we've changed it to second quarter 2019 and 2020 to show that 25% loss. No, that's not the one I wanted. Hold on, it's the next one. Whoops. I just undid what I did. Okay, this is what I actually want. This is for a different reason. Balance sheet, yes. Okay. The profit and loss statement, instead of it being May, we have said second quarter. I can't type today.
Barring that they have been in business for 2 years.
Yes, that hadn't changed.
Okay, because I was thinking about square one, because we wouldn't have data going back to the second quarter of last year. We opened in at the beginning of the third quarter.
Yeah, new businesses are not going to be helped by this, sadly.
No, I mean the IRS, expects you to be profitable in 3 years. You can get 2 years of losses, but after 2 years, you have to show a profit, or you're just a hobby.
It's a hobby.
So I think 2 years is appropriate. The balance sheet, I think we mentioned this last time. It's really a snapshot of a specific time, is it not? It's not a year.
But what we're trying to get at is the accounts that they had before this all went crazy. it will show us if they had debt prior to this, which would make them, like if they're full in debt prior to this event did not bring their demise. That's why I'm interested in this. What we'll get though for bank statements, we will know what their current balances are for their operating statements. Now, David, I can see what you're thinking. You're like, well, what if they got a $100,000 PPP loan after this and they don't tell us about a secret bank account they set up? That's a good point. There is an amount of trust here. I just didn't want to have to request so many documents from them. That makes it difficult for smaller businesses to apply. Because I'm frankly going to be surprised if businesses can produce a current second quarter 2020 profit and loss, because it will just have ended. Yeah, Erica, you're shaking your head.
I was answering my mother-in-law.
Oh.
Yeah, sorry, I had a question. But I was wondering while you were talking about that, if we have a third party doing the underwriting for us, secret bank accounts might be something that they can fish out using FEI numbers and social security numbers. So if somebody has taken out a loan through the Small Business Association or has gotten a PPP grant and they choose not to disclose that, that should be something that our institution can find out using their federal numbers.
Okay, if that's the case, then we don't really even need to ask for a balance sheet, because I was just doing that as a trigger for us to know like what kind of accounts they had, but I was trying to keep it just to keep the year intact with the profit and loss that we're going to use to look at their burn rate in an average year.
Why are you thinking that we wouldn't need to look at a balance sheet?
If we can look up bank balances, I don't know what underwriters can look up.
I don't either, but I would think that they could search a database that would tell them who has received federal money already.
Maybe we're giving too much credit.
That's very possible. Yeah, I'm not going to say there's very little documentation required for any of that.
I'm still, with regard to a balance sheet, it's really how many assets and how many liabilities have at a specific time.
Yeah.
Not over a range of times, not over a year's worth.
Well,
adjustment for a monthly balance sheet showing what they're. Am I missing something?
I see what you're saying. Well, you can run a balance sheet that the start date is irrelevant. It's the end date that's relevant. I was just making it so it lined up with the same dates of the P&L. But I could just say balance sheet ending March 14th.
Okay, that makes sense to me.
We could also do balance sheet ending June 30th, 2020, because that's the end of second quarter. I just worry that some businesses don't have their financials finished yet. I mean, I know like Sine takes an extra month after their quarter closes to actually produce a financial. Maybe that timing will work. I mean, maybe we won't even have these loans available till August. I hope not.
Depends on how long we get this stuff together.
Well, here's the issue. We cannot ask them for a profit and loss statement up to June 30th and use that as regular cash burn rate. That is why I picked this. So it was the 365 days preceding the incident, and it was the freshest data, because this is how we're going to calculate how much their average expenses for a year and how much it costs them to operate, every day. So I wanted the dates to line up on the balance sheet we were asking for, but I could make balance sheet ending June 30th, 2020. It'll show us more, but it's going to show us debt that may be incurred after the event that has something to do with PPP. And maybe we want to see that. I doubt it'll always be identified as PPP or EIDL. It'll just be debt on some, or won't be at all on the balance sheet. I have found that most business owners are not accountants. They hire accountants, the smart ones, the ones that think they don't need to hire accountants. They don't have these numbers together, and they will not be right.
Mm-hmm.
And so I thought if we went with older data, it might be more likely that we'll have these numbers.
I'm fine with the March 14th date as the end date. What does everybody else think? Why are we mentioning profit and loss statements twice, though?
This one is to show the 25% loss. This one is to look at burn rate for a typical year. Now, could we can't compare. The thing is, you have to get something current because this is today after the event, and you have to look at something that is an equal time period the previous year so that you can actually see the difference.
Right, understand.
So that's why, I mean, because this isn't enough information because it stops before the event.
Mm-hmm. Well, yeah, because that gives us an idea of their typical
Yeah.
year. And then the second bullet gives us an idea of the comparative period.
Yes.
Yeah. Mm-hmm.
Let's move this up so that it's with the other one. I know it seems crazy, but you know, to do that cash reserve requirement, we do have to know their burn rate. And you know, this is not a perfect science. Maybe this year is an anomaly anyways, these last 365 days. It's not going to be perfect. It's just a vision into what's really happening in the company. And ultimately, I think we might have some discretion because we're scoring these.
The scorecard will determine relative ranking of handing out loans,
Yes.
assuming
Now,
all the other criteria are met.
Right. You see, I've added an alternate option for business without electronic accounting records. The closest thing we're going to get is 2019 business tax returns. But if, you know, and I consider a business tax return being like a C Corp, an S Corp, their return, an LLC, but also a self-employed person could be one person and all they have is the self-employment schedule for a personal return. But if they don't have electronic accounting, that is the best we're going to get to help them. Or do we say they're not eligible because they're not professionalized, which will knock out a large number of minority businesses?
I prefer that we have an alternate for smaller businesses that might not use an accounting firm or even QuickBooks. I like that idea.
And if they haven't filed a tax return for last year, for 2019, I worry about that. You know, they are due. Well, they were already due because I don't know that they extended the date on C Corps, S Corps. But Dan, do you know if they did, or is it just personal returns?
You know, there's an article in the Wall Street Journal about that, and it seemed to be the article didn't distinguish between individuals and business returns.
Mm-hmm.
I'm not certain of that, but it implied that everybody got until the 15th, which is good for me personally because I haven't filed yet.
Me either. Well, so July 15th, it'll be after July 15th before this thing is out in the wild. So if they haven't filed a business return, then I don't see how they can be eligible, even though they could have filed for an extension and they don't have electronic accounting records. I don't know how we can get what we need from them.
But even if they file an extension, we'll have a snapshot at least of what they think it will be close to. They have to.
They can guesstimate it, and it doesn't even have to be close, honestly.
Okay.
It's not trustworthy. But, you know, maybe we deal with that problem if it happens. Because there are ways to work with people, like you could collect bank statements and add up all their deposits and all their expenses and say, is all this business? They say, yeah, okay, we trust you. You could do something like that if push came to shove and it was a business that we wanted to target because it was a kind of business that we want to help. And I think we might have to do that in some cases.
So is the onus going to be on us to actually do that work?
I don't know. But, you know, part of the reason why I wanted to be on this authority was because I have these expertise and I have been helping businesses apply for these other loans. For no money, like I don't charge them anything. I'm just helping the people that need help. So I personally,
Whose dog is it?
it was Erica's. I would personally be okay with hand holding a number of people to get the information submitted, or I could at least look at it and find out, no, there's no way they're going to produce documentation, or it could be cobbled together. Will it pass an underwriter's requirements? I don't know, but we have to deal with it when it happens, and maybe we can help them, maybe we can't. It's not our obligation to help them, but if I can, I will.
Okay, well, I think we can leave it as is for now and deal with anomalies later.
Yeah. Okay, so those were my 2 changes. So I'm going to email these to Ilka and let her drop them into our other document, and then we can kind of see if they need to be tweaked anymore, because we didn't finish it. I don't think we need to go through the rest of it anyways. Is that all right, Ilka? Okay.
She's nodding her head, yeah.
All right. So let me unshare.
Sorry, I was on mute. Sure, that works great.
Okay. And so maybe if you will get the document up, the other document, the real one, we can drop this in there.
Well, I'd suggest, I think that, with all the changes that we made, we're all in agreement of what we put in last week, we were not?
Yeah. I just don't like to be the owner of the document.
No, I'm fine. But Ilka can bring up your document and we can go from there and finish it up from yours.
What if I accidentally, I would not trust that I have not deleted something accidentally because I was focused on these 3 areas. So,
Well, I'll tell you what, I'll take it upon myself to look at the previous one and this one and make sure that they're consistent. I mean, that we haven't lost anything.
okay. So then let me drag this one into our Google Drive. And then it'll be there for everybody to look at. And I'll put it under a meeting agenda and minutes. Dan, do you have any hesitations about the stuff we're proposing?
No, I think, in fact, I feel very congratulatory about the board. Y'all are being very thorough about it. It's commendable.
Okay, that file should be there in the share, Ilka, if you want to open it. You're on mute again.
Sorry, my dog was barking. I was just trying to.
It's okay. I've got to figure out how to edit it on the drive.
I think you double click it and open in Google Drive. Like it should have an option to open in Google.
Okay.
Last time you did it in Word and just made modifications in Word, did you not?
Yeah, that's what I did, but then I'll have to download. So I think it'll be easier if I just do it this way. Give me one second.
If you right click on a document in Google Drive, and pick open with, Word should be one of your options.
Okay.
And it'll open it as a Word document from your Google Drive.
Okay, I think I'm going to do it this way. Let me share my screen so you guys can see it.
Yep.
Okay. Got to figure out how to make this bigger for y'all. Do you guys know how to make, I guess I can just make the font bigger.
See that view 100% in the bar up there, Ilka?
You're right. Thank you. You got it. All right. Awesome. Okay, here we go. Okay, where would y'all like to start talking?
You notice where it says loan amount up to 12,500? That was the other change I made. That's why I didn't want this to go up here, because I was like, I changed this and didn't ask. But we talked about that, and we didn't really set 12,500, but we set up to some amount, and we didn't define that. So we do need to talk about that.
Yeah, we didn't agree on it, but we did entertain the notion of anywhere from 7,500 to 1250. 12,500.
And we also said, though, I think we said that if it's not going to get, if that amount of money doesn't give them the 90-day cushion that we want to give them, then we might not get repaid at all. So do we want to put a limit on it, or do we want to take a look at the businesses that need it, that will likely be able to pay it back if we can get them to that 90 days?
Can we say variable and just not say any amount? Because
I don't want to discourage a business that needs $20,000 from applying because they think that 12,500 won't be enough, or applying for it anyway, knowing that they're going to fail anyhow. But it just puts, postpones that event.
we could say variable based on need and then not define it. What do y'all think of that?
And then we can have discussions about individual risks.
Could I make a suggestion there?
Please.
Maybe put down a number and put in parentheses, exceptions will be considered.
Okay.
Because if you say something like variable based on need, that implies that creditworthiness is not a factor. And the more you borrow, the more important creditworthiness is.
Right. Okay. Okay. What do y'all think of that?
I think that's fair.
Yeah.
You want to leave the cap at 12,500?
But it says exceptions will be considered.
Yeah.
But I mean, in the wording right there, just leave it at 12.5.
Yeah.
I'm fine with that.
Dave?
I'm with it.
Okay.
But anybody else?
Yeah, I think that works. That covers it.
Okay. I think we went through the eligibility criteria
Yeah, we did.
with the ones that we've just added, so I don't think we need to review that again.
Yeah.
The public benefit, I think we also talked about that, if I recall correctly.
Yeah, I think we got through everything except those two things that I edited, but was there something else lower down? Because I took out the other loan. In this document, I took all the stuff out for the next loan because we talked about it just being this one from now on, right now.
Right, we're not putting the second
Right.
loan in this document this time.
So there were some other things below this information, like that graphic and some other stuff. Are they supposed to be part of this document, or was that just to put everything together in one place?
I was sort of just like envisioning a flow of how it might work, but we can pull it out if you
like. Is this though client facing, or is this for us, this graphic?
this is really for us.
Okay.
I mean, it will be a public record, but
Yeah.
at one point I saw reference to an evaluation committee. I'm not sure it was on this document, but I thought I saw a reference to the actual people who are going to evaluate these things, and I thought the entire board is responsible for that.
Yes.
Not a committee of subset.
Yes.
Okay, we just need to make sure that there's no reference to a JDA committee on evaluations or whatever it is, because I thought I saw that somewhere.
We'll go.
But I'm fine taking the flow chart out.
Okay, I'll remove the flow chart and make sure there's not any reference to the evaluation committee or to a separate evaluation committee.
Right.
I mentioned about this website I started playing around with just to pull these pieces into something that might be public facing. better than just a Word doc. Are y'all interested in kind of seeing how that came together? And is that something y'all are interested in? Because this authority is going to be around longer than this program, so it kind of needs a front-facing website, I think, more than just a page on the county website.
I agree. I'm not sure right now is the time to take a look at website prototypes yet. I mean, I think that would be eventually what we do, but I'd like to work on finishing this and then talking about we need to get the weighting criteria for the commitments. In other words, there's a lot of documentation, and Dan, you know better than anybody else what we need to come up with.
Yeah. In fact, I have a list if you'd like to hear it. I mean, I mentioned it quickly last meeting, but I could go over it now if you like.
Is it in order of what you think we should do next? Or is there a?
Well, if we finish the guidelines today, an important thing that remains is developing a relationship or contracting with an administrator.
Right.
Another thing that has to be done before we can legally do any of this is registering the authority with DCA, but I've got the information that I need to do that. In fact, I was on a call earlier today about it, so that'll be taken care of. Before you can take the program to the street with the guidelines without having the rest, but my experience is if you've got a loan program, it's best to have all the documents together because they need to harmonize. And what I would need to prepare is an application, and we talked about that last time. Apparently, some banks think that's a big deal, and you know, I'm sure they have other things that they might like to look at. But at the end of the day, it's our money; it's not the bank's money. And so I would think that we want to start an application so that we have a document that matches the final guidelines. And then an important thing is the evaluation factors, and the evaluation factors really are already in the guidelines, but we need to create a matrix and we need to assign weights to them unless they're all equally weighted. We need an award document, that can be something very simple, or it can be a letter, or it could be more complicated than that. I need to prepare a promissory note, and normally you'd have a loan agreement. I'm hoping to avoid creating a separate document by incorporating the guidelines into the note as appropriate and have a fairly long note instead of having a separate loan agreement, in keeping with the idea that we don't want to burden these businesses with too much paperwork. And then I think the board was wise twice. First, to separate the next phase of this from this phase, and then secondly, to remove the collateral requirement from the next phase. It's my understanding that requirement's out, which means I don't have to prepare all the collateral documents. It wouldn't take all that much time to go ahead and create the balance of the document for the program document package. But to me, that's, if not the immediate next step, a very close next step.
So, middle island.
Okay, so is it important that we establish this relationship with our underwriter?
I think, again, my advice would be to go ahead and initiate discussions, because that's not going to happen overnight.
Right.
Even with the first entity that you talk to, if you end up making a deal with them, it's going to take a while. And if you don't, you need a plan B and a plan C, and it'd be better to be talking to more than one entity at the same time if we have candidates.
Okay.
Would you like me to share an update on that, or would you like me to wait until the staff report?
I want to get to the staff report, your staff report, if everybody's okay with that. So looks like, well, I see the review committee listed here right on the page. So we need, I guess you'll just take care of that. Wherever it's listed. Right,
Oh.
There we go.
Another mug blew up. And so I cleaned it up with that, but left, and I wanted to shake it out first.
Okay, that was a private comment, I guess. Okay.
Oh, I'm sorry.
All right. What else is left of the document now?
I think it was just the resources that that's listed there.
We want to delete those or leave them in?
I mean, I don't think they belong in the guidelines document, but I do think they need to be available to the public, but just maybe not in the document about the loan.
Okay.
That's fine. We can separate that into a separate resource document.
Mhm.
Everybody's okay with that? Okay, so I think what I'm seeing with the minor modifications that we pretty much have this document, the RLF guideline document completed. Anybody else see anything that needs to be addressed here?
No.
Okay, I'm not hearing any, so at this point, I'd like to entertain a motion to approve the guidelines as Ilka has edited. Do we have a motion from somebody for that?
So moved.
Second.
All right, who, okay, Eric is second. Who did primary?
Was Kelly.
Okay, Kelly, I didn't hear you. All right, Kelly, the motion, the seconded. We've had a fair bit of discussion, but is there anything else people want to say about it before we vote to approve it? All right, all those in favor of the motion to approve the guidelines, say aye.
Aye. Aye.
Opposed? All right, motion passes unanimously. All right, so it seems to me like the matrix might be another thing that we need to talk about with the weights and what the weight should be. Is there any documents that kind of give guidance on how that looks?
I can provide couple of samples from construction contracting. It's not very complicated. It's just a grid
Right.
with whatever the evaluation factors are and what the score is. And of course, the total points need to add up to whatever it adds up to. Sometimes it's 100 and sometimes it's, you just keep throwing things in and it adds up to something greater than that. You don't, I guess we need to I'll go back and look through the document to make sure it's clear that you're not automatically a winner if you've got the top score. There are exemptions in the open records law for evaluations in connection with construction contracting until the award is made or the procurement's abandoned. I'm not sure that there is an exemption for something like this, and there certainly isn't once the solicitation is over. So just keep in mind that it's entirely possible that the scores assigned individually by board members on a document may become public record. I just thought I'd point that out. But and I think the final point is that even with a high score, for whatever reason, and I'm assuming this is what the board wants, that you aren't obligated to award a loan to the high score. I don't know what other basis. Let me just look at the document real quickly. In construction procurement, it's usually in the out is a decision is based on the best interest of the authority. And I don't know that we've got something like that in here.
Well, that sounds like pretty good wording to me for an out. So. So it's a binary thing. If they meet the criteria, they get the X points.
They get considered and they get a score. And then
is it a variable score though? Like if it's
Right.
would they be getting from 0 to 30, and they could be anything in from 0 to 30, or is it if they meet the criteria, they get the 30 points?
That's right. Well, let's say that we had a grid where all the different evaluation factors had a point and a point score, and the total points added up to 100. And we have 7 board members, and let's assume that no 2 board members assign the same score. Then you would average these scores, and so that candidate would have a point score, and the other candidates would have their own point score, and somebody would have the highest one unless there's a tie. So one way to go about it is to say the borrowers, the prospective borrowers with the highest scores until the money is exhausted, get the loans. Another way to say it is that the score is a factor in awarding the loan, but the ultimate decision is made by the board based on what they consider to be in the best interest of the community. So some guidance on that, I think, from the board would be good to have.
Okay, so we would just fill out our evaluation and score it, and then we take the average of that as the score for the applicant, correct?
Right. That's exactly right. And you do that for each applicant.
So we don't really have a discussion of, I pick 30 points, try to influence the point, the points that individual members choose. It's just
that was my point, that you could have that discussion if we reserve that right. We want to be careful that we're not creating something that almost makes us obligated to make a loan to whoever gets the top score, because we may feel there's somebody more needy, somebody who can do more for the community, somebody who's understated their case, for example. Or you may have reservations about the credit worthiness or the character of the top scorer. I mean, bankers do that. I don't know whether they tell you about it or not, but they do. So we either go the route of the mechanistic route of you come up with scores and it's arithmetic, and then if you're tops, you win. Or we go through that and say that we consider the evaluation factors, but the ultimate decision is based on what's best for the community. And which that latter would require a meeting of the board.
We also have that public benefit thing where people can get extra points, like women-owned, minority-owned, the 50% buying local thing. That gives us some quality points.
That's the points I think we were talking about, is it not?
Well, it could be, but what you could do would be to have a number of points that board members could assign for things like that. And so the ultimate score would have that taken into account already. It'd be in the total score.
So maybe the sweet spot is that a company that we could give $5,000 to that would get them 90 days cash solvent. Maybe we have ranges where, depending on how much cash you actually need, like how many days of solvency you have left, we could give them higher points for they're more solvent than the non-more solvent. You know what I'm saying? Like, look at the finances with ranges where we can assign points that we're not doing with discretion or our own personal opinion, but something that actually is mathematically calculated, but allow some quality points on those public benefit where we have discretion.
Exactly right. Exactly right. And that also protects the board. We're subject to the state's code of ethics. And when Marvin Griffin was finally elected governor, a reporter asked him, Marvin, what's the first thing you're going to do now that you're governor? And he said, reward my friends and punish my enemies.
Oh.
So you can't do that. And we don't want to be accused of anything like that. And being able to point to a score and individual directors weighing in is a great way to have transparency on that.
So we're saying that the financials would be formulaic, but the additional benefits would be each board member would assign a number up to the max for that benefit.
We'd have to have a list of the benefits so that we're not making stuff up, and we'd have to have a range of points that could be assigned, but subject to that, yes.
Okay.
So like there's one that says applicant will meet at least once. You either answer yes or no to that. you know, it's a binary choice, but like applicant will stay open to operate with staff not less than 50%, about the same, I guess. But maybe if an applicant certifies that they are 100% woman-owned or minority-owned, they might get more points than if they're only 50%. So it kind of gives you some discretion there. Now, should there even be a board member value score, like this business is very important to the constituency in an area that I'm concerned about? Like, could we add some value points that are our personal opinion, but they don't affect all the decision? It's like a small amount, but just like enough to eke someone in. Can you do that?
I'll find a way to do it if that's what you want done.
I personally am a little bit leery because I don't have a constituency per se. I mean, I live in the city of Winterville and we have a mayor who's representing us here. I don't have a constituency I'd want to give points to based upon my personal desire. So I'd like to stay clear of that, frankly.
I think we
You
need,
could align it with something like a state opportunity zone or some other state designation that has
Sure.
some, I don't know, some criteria that are already attached to it to target underserved areas. I don't know, just
Right.
as long as it doesn't look like we're redlining.
right.
Yeah, we don't want to be accused of that. But definitely there are going to be some areas in the county that need their local businesses
That's right.
more because of access and transportation issues.
I guess that's what I'm getting at, is ways
Yeah.
that we can tilt the scale for a business that, I hate to use that frame, but where they really need this business to stay open in the area that they're in.
Because I'm going to say, for instance, here in Winterville, the bus does not run through here. And it is 4 miles to the nearest bus stop. Now, that would be a case where if this business was serving a population in this area, they wouldn't have access to a business like it without transportation. So we might want to consider things like that. How can we put that in writing so it doesn't look like redlining?
Well,
Not
we have
redlining.
we
be
have
clear.
reference to our goals, the goals of both the county and the city of Winterville. We state that you know, this is in keeping with the goals. So maybe we can craft a set of some goals that can help guide us in determining which
that are
business
in line
to support.
that are
Yeah.
in line with the goals of the authority.
Right.
Yeah. Okay.
But what does everybody else think?
Tim, you don't say anything. What do you think?
Busy taking notes.
I am busy taking notes. I think that what it sounds like is the struggle is there is some qualitative and subjective content that we want to be able to incorporate, some socioeconomic factors, some geopolitical constraints, and we want to be able to wrap it up with a nice big bow. And I'm not sure if we can necessarily have an ironclad protective wording that also allows us flexibility to maneuver within the community. I think there's a certain degree of inherent risk that's going to come with in trying to take steps that could be seen as investing in what we see as value set. I personally think it's the way to go. I think there are a lot of businesses and places in town that I think we're going to get a lot of great scores. There's a lot of places that are going to need help. But we have to really look at where the money goes in terms of the community investment. So while I think that's really important, I'm a little concerned about how we're going to word this to entirely insulate ourselves from critique. But I'm assuming that's Dan's job. So
Yeah.
Yes, he's in the court of law. He's gonna defend us. Yeah.
I'll defend you.
As long as we do it by the rules.
Dan, are there examples of other communities that you can think of that may have outlined some goals like the ones that the group are talking about?
The ones I have seen, and I have seen a lot, are very loose. And in part it's because it's small amounts of money, in part it's because of haste, in part it's because of not really understanding the pitfalls in what they're doing. but it's something like, well, for example, we were talking last night at the DDA meeting about small grants that originally were going to go for personal protective equipment, and then there's a debate about that, and then settled on, and y'all will like this. I actually thought this was a good idea, paying for umbrellas or awnings for restaurants in downtown so that people could seat themselves outside during the summer months. So, but all of that was driven by, yes, we got to produce public benefit in the form of promotion of trade, of industry, trade and agriculture. But that was it. It wasn't anything to this level of detail. And I'm happy as long as the statutory requirement is recognized and met in some way, and that's a defensible way. But as to whether, if you had competing projects, and the only standard in that case was revitalization and redevelopment through promotion, trade, industry, and agriculture, it's up to the individual board member to assign a score. And, you know, we can do it that way. We can say that there's 3 or 4 things here, individual board members will assign a score, and then instead of doing it separately, you do it in a meeting and there's some discussion about it. And that, as was said earlier, that could influence a vote, because unstated is that this particular thing has a deeper community impact in one part or another than another one does. If it gets to the point where you've got a secret scoring mechanism, that's wrong. But if you come to recognize a merit in assigning a higher score on a common factor, that's okay. But I can put some thought into coming up with a tiebreaker, maybe call it a tiebreaker. You know, the board's assessment of deeper community impact in the things that are supposed to be promoted by this, and that's what. If you give some points to that, that can make all the difference. And that is somewhat subjective, but at least there's a standard that we're applying.
And do you see us grading these applications before we ever send them to the underwriter to see if they're really viable?
I think that we should, you know, and in our model, well, I mean, there's different ways to do it. For example, what DeKalb County is trying to do, and I don't think they've still been able to pull that together, they basically turn it over to a national nonprofit that would go make loans to people that have COVID-19 related financial needs, which, you know, there's all sorts of flaws with that. But the authority removes itself from that decision. And I mean, I'm not saying there's anything legally wrong with it, but that's, our board members are the best judges of what the best use of the authority's money is and what the best public benefit is that we're going to get in exchange for this. So I see our administrator as taking our evaluation factors, doing a credit underwriting, and, you know, credit worthiness, I guess, needs to be one of the evaluation factors, and coming back to us. And then at that point, maybe they make a recommendation. Maybe the administrator's recommendation is one of the evaluation factors. But the board's got to decide. And then the loan, the funding of the loan, the monitoring of the payments, the collection, all of that would be in the hands of the administrator. I mean, we could subcontract out a credit decision based on our list of things that need to be satisfied. And then you would have a banker making those decisions in our model. And that's probably not, there's nothing wrong with doing it that way, but it's probably nothing legally wrong, but it's probably not the best way to get what we're trying to get out of this.
You brought up credit worthiness, and I mean, every study will tell you that minority communities are undercredited. They have less credit, no credit, or bad credit just by the nature of things that happen. So when we talk about credit worthiness, are we looking at like a 600 credit score, or what is your value of credit worthiness?
Well, bankers have ratios that they assign, and they look at credit history for one thing. I have a good presentation. I can send you the whole presentation in just this one slide that somebody put together for one of my sidebars where they talk about the 5 C's of lending. But I think one good thing about the work that the board's already done, I mean, the things that we were talking about earlier, how many months worth of financial reserves do you have? Those go to creditworthiness. And if those are the things that we're concerned about, then we don't need a banker telling us, I wouldn't make this loan, because we're saying that if this is satisfied, then we are satisfied. This is a little bit more than what the matrix looks like. This is getting into the loan administration, but we need to get into loan administration.
Yeah.
So in different situations, I've said it would help the board to take the ultimate lending decision out of the hands of the board. Therefore, no board member would ever get criticized for doing it. And that's more like a DeKalb County situation where they just have a general thing. You've been hard hit by COVID-19. Do you need some money? So you turn it over to a nonprofit, and they will. Let's just say hypothetically that it's a hypothetical nonprofit. They would pay lip service to that and then go do what they're going to do. And that gets the money in circulation. It will do some good. What we've got here is a little bit more customized to this particular community. And again, thanks to the board's hard work, we can be less concerned about a third party looking into the things that we've already looked into and satisfied ourselves with. But I think we've got in the guidelines already a pretty good list of what we're looking for. And so we assign scores, maximum possible scores to that, or everyone gets the same score. Regardless, you come up with a score on that. And then our administrator's job is, in this model, the mechanics of the loan. I mean, I don't imagine we want to be making sure that promissory notes get signed, dispersing the money, writing a check to fund the loan, keeping track of whether payments are made when they're supposed to be, whether the loan's paid at maturity like it's supposed to be. The reports that we would get, I think, ought to come to the board so we can monitor what's going on with this. Mm-hmm. But I'm not legally worried about just essentially importing what we've already got or what we have today in the guidelines into the evaluation factors. And if you like, I can come up with something that would be defensible as kind of a bonus score. And there's nothing wrong with a bonus score. Extra public benefit, 100% MFBE, particular impact to the community. Like, for example, if it was the only science fiction bookstore in Athens, I'd want to keep it open because I like science fiction. But something like that. If you want a tiebreaker or a bonus or something like that, we can come up with something that's defensible.
Okay.
Okay, so I mean, it sounds to me though this evaluation matrix needs to be fleshed out. Okay. For all the criteria, right? The guidelines.
Excuse me for interrupting, Mr. Chairman. I can do a draft and circulate it to the board, just as not even a proposal, just something to look at that you can react to and amplify if you like.
Sure, a straw man would be great. I mean, if we get something to start, that'd be great. And then we can discuss that, in our next meeting, that those weighted values. Is that okay with everybody?
Mm-hmm.
Okay. What else do we need to, now that we've ratified the guidelines, what else do we need to do, or at least start putting on our docket for consideration? Is there anything else we need to do today?
To do today, I don't, at least from my perspective, no, but we're going to have to address the rest of the program documents, and I might as well start work on the note, and we're going to need that sooner or later, but that can trail. What we're doing now is the essence of the program. So I think the most immediate need, there's two immediate needs. One is to get the board to work on and be satisfied with the evaluation factors and how that works. And that will influence what we ask the administrator to do. And Ilka's going to report on that, and I can hardly wait to see what she's got to say.
Okay. Well, I think we've now that we've got the kind of old business stuff taken care of for today. Is there any new business that the members of the board want to discuss at this moment in time before we move to staff reports? All right. Not hearing any. I think Ilka, you're up.
All right, so I have some good news and some potentially good news. So, we talked a little bit previously about one of the banks in town that said they would be interested, and then I spoke with another bank earlier today, and my contact is in the marketing department, but she called their chief credit officer, and he said absolutely they would be interested in looking at an RFP once the RFP goes live. So that's very good news. They have a couple of branch locations in Athens, and they're a community bank. And then I also, about 10 minutes before this call started, I got a call back from Access to Capital for Entrepreneurs, which is a group that also works with entrepreneurs to do lending. That was the group that Small Business Access referred me to. So I'll call her back probably tomorrow morning and talk with her a little bit and see what kind of information she can share with me as well.
Just like we're going to need to have an RFP. Is that typically how we're going to evaluate our underwriters, is through an RFP mechanism?
It is. It's not a legal requirement. Usually it's good policy with a public body to do that.
Mm-hmm.
Particularly if you're proposing into an active market where there's a lot of competition. In this, I think the market of service providers is very shallow. So I don't know that we need to really make a full court press with getting the RFP out. It's probably good to write one up, make sure that who we're talking to gets one, so we can say the decisions based on the RFP, post it on the websites of the local governments. And unless somebody knows of a central place to send it, for example, for construction, website for RFPs. But if there's a local bankers association or something like that, or if the Chamber of Commerce has members who might be interested in it, you might give them a copy. But I'd be a little careful about stirring up interest with, service providers who are not financial institutions, who wouldn't have the background to do it, or really the staff to follow through. But I would do an RFP, and I'd do a light job of getting it out to people who might be interested.
Couldn't we stipulate some of these concerns that we'd have in the RFP itself, so we can preclude certain institutions from being considered?
I don't know that it needs to be in the guidelines, but I mean, the board would be making a decision, unless you left it up to staff, the board would be making a decision as to who is on the short list. I mean, I think that's a good way to describe it. That we'd send an RFP out to a short list. And right now the list is real short, it's 2. And the only way I know to expand it, maybe we send it to every bank in Athens and Winterville, or every community bank in Athens and Winterville. I honestly don't think many of them or any of them are going to have any level of interest. But if we're going to have to pay something, if we're going to have to pay a processing fee, we do need to know what that is as soon as possible. So, and competition would be helpful in keeping that figure down low. Mm-hmm. Do board members have any ideas as to who and what entities in the communities would be likely to be interested in this? It's not an everyday thing.
What about First American Bank? I mean, they're local.
They're one of the 2 that have expressed interest.
Okay. Have we talked to anybody at Commercial Bank?
I think Dodd spoke with them this week, and they were not interested.
Okay.
Ilka, can you tell me the name of the other bank other than First American that showed interest?
Yes, it's Pinnacle Bank.
Mm. Mhm.
And
And they have
what about
Athens.
Athens? Yeah, Athens first.
But they're not. They're Synovus, aren't they?
I have a call in to Phil Bettendorf, but I haven't heard back from him yet.
I had a
We mentioned credit. We mentioned credit unions. Is there any? And you said there was some probably not want to consider. I think you had some concerns about certain credit unions, but is that even a consideration?
Some of the credit unions are very strong. If we have local credit unions, there's no harm in providing them with a copy of the RFP. I don't think they'd be interested, but there's no harm in doing it. I did have a thought, though, while we were talking. There is an organization, the Community Bankers Association of Georgia. It's just the community banks, although some of them are quite large. And I can arrange for our RFP to go there, and they can let their members know in a newsletter or including an email newsletter that this RFP is out there, and we can have a link to where it's posted on the website.
Right. Yeah.
Actually, that might be a good way to be able to respond to folks being concerned about being left out. If anybody's interested, it's going to be a community bank. It's not going to be a Wells Fargo or a Truist or any of them.
Right.
So if we just touch the community bank base on this, that's probably would be a good fact if anybody ever complains later about not having a shot at it. But again, there's not going to be a lot of money in this, so there's not going to be a high level of interest.
Does anyone have a good contact at any of the credit unions that are in Athens? It's like Peach State and First Reliance, and I think First United, maybe.
Well, there's Georgia United. Georgia United Credit Union. I think it's that's who our credit union is. That we have a car loan with. So I don't know anybody personally there. I'd have to talk to them. Okay. I agree with that statement. Anyway, I could go to they're right down the road. I could go and talk to them and see if there's interest.
That'd be great if you could get
an account arrangement. I'll do that. Yeah, I'll talk to them about it. So how are we going about putting together this RFP? Do we have samples of other RFPs that we could start from, that we could flesh out? I mean, I was involved in RFPs at UGA, but we had a whole bunch of people working on from procurement to all different areas. I know Clarke County has its own procurement department that puts out RFPs. I don't know if they would help.
I can work on a draft.
Okay, that'd be great.
Do you possibly have any examples from communities that you've previously worked with, or just names of communities? That could be another route to choose to see if there's one we can borrow and adapt.
I was just thinking of that. I'm actually working on an RFP for engineering services for an industrial park master plan now. They aren't very adaptable to this. But I tell you what I can do. Let me send you, I think it's probably best for Ilka to take a shot at the draft and let me react to that. But I'll send to her examples that are as short as I can come up with, because a lot of these are very extensive. And these days you've got to have all sorts of paperwork, immigration forms and affidavits and everything for anything. And we don't want to, we're really asking these folks for a favor more than anything else. So we don't want to burden them with a document that they'll say is not worth my time to read. But I'll send you something that's as skimpy as I can locate, and we'll work together on coming up with a draft.
Okay,
Kelly,
that's great. Thank you.
Kelly, you're on the Downtown Development Authority Board, right? The mayor
That's right.
has a seat. So they had to have put out an RFP for a bank for their revolving loan fund. I believe that they have a bridge loan fund, or maybe it was for the facade grant program, but there is a bank that they work with that's downtown, and I'm assuming that they put out an RFP for that.
I'll ask David and Linda. They talked to them this afternoon anyhow.
It would have been in the Pam Thompson days.
Okay.
So,
and Our Housing and Community Development Department has that revolving loan fund that we seed with federal community development block grant dollars too.
Yeah, I'm just thinking that they may have, a format that we could copy.
Yes, I think the ADDA works with First American. I think First American manages those funds. I think Linda Ford told me.
I think that's correct.
Okay. All right, okay, what else do you have from your staff report? That's a lot put back on you.
Yeah, that was my good news for the day. So I'll keep you posted when I talk to the president of ACE tomorrow. That's the Access to Capital for Entrepreneurs person. They do a lot of small business lending and that sort of thing.
Okay, sounds good. Council report.
Not much.
Anything else?
I'll make it short. I think we talked last time about the possibility of legislation to produce tax credits, income tax credits in Georgia, which are used for economic development purposes. And that, down the road, I would think that the JDA would be involved in things like that because there's all sorts of opportunities. So right now, your level of interest is probably pretty low. But just to kind of expose you some to that, there is a bill, I think it's Senate Bill 315. It's been introduced in the Senate, and I think passed the Senate, that would have done a great deal of, and I guess I don't want to use the word damage because that carries a value judgment with it. They would have gone a long way towards taking away a lot of those credits. And it stirred up the business community and the economic development community. The Georgia Chamber of Commerce and the Georgia Economic Developers Association are writing letters opposing it. If the bill is stopped, and I'm, again, no value judgment as to whether it should be or not, but if it is stopped, it would be in the Senate. And I don't know whether the governor would sign it if it passes both houses. He probably would. But it's a function of the impact on the state budget of the pandemic. The only other thing that I can offer in connection with that, and this is more opinion instead of legal matters, is I personally noticed what seems to be a good bit of resiliency in cities and downtowns. I mean, the people are coming out, they're eating in restaurants, they're shopping, and again, not like it used to be. But I'm hearing anecdotally from some of the cities and counties that their sales and use tax collections so far are not far off target. What the year looks like, I won't know, but that's sort of an encouraging sign there, and we need to keep an eye on it. It's going to be making a hard job harder if public revenues are not able to keep up with the demand. So that's kind of my report. I didn't mean to close on a down note, but I guess I'm not, because I'm saying I'm seeing some economic life, which is reassuring.
It would be more reassuring if we had a vaccine.
I was going to say.
Yeah, for sure. It'd make a huge difference.
Okay. Then last thing is, do we have a motion to adjourn for today?
Stephanie will make a motion to adjourn.
All right. Is there who's going to second it?
Well, I'll second it. I feel like I've seconded everything today.
That's fine. All right, Erica seconds. All those in favor say aye.
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 Any opposed? All right, meeting adjourned at 4:28 p.m.
One final comment. Seconding motions is a very important job.
So
That's
important today. Thanks.
All right, thanks guys.
Everybody. Bye for now.
Well, I'll send an email out. We need to schedule our next meeting. I'll send an email to get us together.
Okay.
Thanks,
That
David.
sounds good.
All right.
Bye.
Take care.